Friday brings sellers to the market. In the outside equities, there wasn't a lot of analytical data to look over on Friday, but there was plenty of rhetoric to listen to, a large portion of that coming from the Federal Reserve. Federal Reserve Chairman Jerome Powell said the U.S. economy can recover from the pandemic, but it'll take time and it'll take hard work. Powell also mentioned that the Federal Reserve and the U.S. government should stand ready to continue supporting the U.S. economy to ensure that overall recovery. Now, typically, this has been bearish for the U.S. dollar, but on Friday, we'll actually see it make modest gains. And looking at the week's trade as a whole, the U.S. dollar is up about 0.25%, which versus the previous week when we saw it more in that deflationary mindset. Now, in the grain trade, we come into Friday with a mixed close. Corn and soybeans higher, wheat lower. Secretary of State Mike Pompeo was in Hawaii this week, and he reported that he met with senior Chinese trade officials, and it was fairly positive discussion that they had. They also said that China is recommitted to the Phase 1 trade deal. Now, initially, that was bullish not only for the grain markets, but it was also bullish for the outside markets, though that euphoria quickly wore off, and we started to move back lower across the board. Now, there was rumors this afternoon that China was back in the market pricing U.S. corn. We'll have to wait until Monday, though, to see if USDA makes the announcement of a flash sale to China or maybe even possibly unknown destinations. Now, on the week, December new crop corn futures will settle up about 2.5 cents or about 0.73%. We'll see the November new crop soybeans up a penny or about 0.1%. For the wheat, they're going to be the biggest laggards on the week. July Chicago wheat settles 20.75 cents lower or about 4.13% down. We see July Kansas City wheat futures down 20 cents or about 4.46%. And the livestock, we finally didn't really end mix. We just ended lower across the board with just some light buying in the far out deferred contracts of live and feeder cattle. On Friday, though, we didn't see bids being renewed by packers, so it looks like the majority of the cash could already be done for the week. Now, talking China, it could be most positive for the lean hogs, as pork is one of the major commodities that China still needs as they continue to bring cold pork out of their state-held reserves and will need to eventually replenish those funds. On the week, August live cattle will settle up a nickel or about 0.1%. We see August feeder cattle up $1.42 or about 1.09%, and July lean hogs will settle down $3.15 on the week or down about 6.1%. That is a check of the week's trade. I'm Clay Patton. Have a great weekend, and we'll talk to you back on Monday.